on Ari right now, so I think he just popped in. Boom, there he is. Talk about timing, brother. How's it going?
We're back at it. It's been 8 days, Colton, since we last spoke.
Man, talk about a crazy week in the markets. Roughly seven to $8 trillion lost from year to date in the market. What are you seeing? What are you liking? Any opportunities out there that are getting enticing?
Well, first of all, again, just 8 days ago, we spoke. And I'd like to say, at least for me, I was pretty pessimistic about what was to come. We got a rally heading into the week, but all in all, just looking at the composites, S&P down 2.4% from when we last spoke. The Dow 1.4, 1.5 in that range, and NASDAQ 4.5%. So that's all I have to say is from the last we spoke. It pays to be patient. Don't jump the gun on getting in during these mini bear market rallies. What am I seeing right now in this week, this upcoming week? First of all, markets are closed on Monday. I think we're going to get a lot more excitement heading into the week up until inflationary data starts to come out. I'm getting amped up because I am taking a look at the week ahead. In the agenda, we have the Federal Reserve. They're going to be releasing FOMC minutes.
Yep.
Talk about some disruption. And on Friday, I think is a really important date. Investors to be taking a look at what's going on that macro level, the jobs report, the employment report coming out.
Dude, I am totally on board. I think you're 100% right. I think we're going to have a long weekend. People are going to digest some stuff here. I think there's going to be a lot of excitement going into the following week here. We have about 5 to 6 trading days of grace period before any real data comes out. So I think that is going to bring a lot of optimism and new money to the market, the buy the dip crowd. Anytime you're trading below 4,000 on this market, the S&P 500, I feel like that buy the dip crowd is still there and alive and well. Along with that, I will say this, Ari, I'm starting to dig into yields here, and I want your opinion on this. Okay, so definitely, I'm not a yields expert, but I'm starting to see some things unfold here, and I want to give just a quick background on yield. So when we have a positive yield, that means that when I put my money into a 3-month treasury, I'm getting, let's say a 0.5% return. And when I'm putting my money in a 30-year treasury, I'm getting a 3% return. So it has a positive correlation. The longer I leave my money locked up, the more return I should get for my capital. What is going on is we're getting a flattening of the yield curve. And when the Feds raise rates, they raise it on the short end, and we're starting to see a lot of money flock to the long end, driving that 30-year down, and it's causing the short end to eventually come up when Feds raise rates. And I want to show you something really quick. I want your opinion on this. So what we have in front of us, Ari, I don't know if you can see this. So this is the correlation between the 3-month and the 10-year, okay? This is the most accurate correlation to recession. Right now, I'm not trying to scare anybody. I think we're in somewhat of a mild recession, okay? Once the job markets follow, if we get a layoff, that'll just confirm my thesis. But what we have going on here is we're getting a nosedive on the 3-year to the 10, or the 3 months to the 10-year. And once that crosses over, that's the inverted yield curve that we really need to pay attention to. And that would be a signal to recession. And anytime 8 of the last 8 recessions we've had have followed this curve. Want your opinion on this?
That's all I have to say in regards to recession right now. If anybody heard the latest out of the Atlantic Fed office, folks, we're already in a technical recession.
Yep, I agree. Man, I've been preaching it, brother.
You hit the nail on the head the last we spoke, but all in all, I think investors are troubled right now with where to invest, with how to invest. I was listening to a segment with Jamie Dimon earlier today, and he was just sharing the fact that, look, when we've never been in a certain situation, don't try to predict the future. Also, I'm not going to fight the Fed here, right? I'm going to watch the Fed. And the truth is, right now, and we spoke about this the last time we jumped on here in a live stream, was the fact that the labor market is strong and people got money in the bank. You have businesses that are well capitalized, but here we are at a point in time when inflation is still high and we can't seem to bring it down. Yep. We're watching the rates. The rates are going to be cranked up, I want to say, by another 75 basis points. I want to be pretty confident when I say that. But, you know, all in all, what this means is we're in unprecedented times, and tread with caution here. And with the Atlantic Fed coming out already with that preliminary data and showing right now that we are negative GDP again. Yeah. Proceed with caution. Proceed with caution.
Yeah, I agree with you, man. You know, it's kind of just piggybacking off of you. I think at this point in time, when I'm seeing the yields collapse, and what people need to understand, yields drive everything that we do on a daily basis. You know, yields drive profitability and able to get liquid to the stock market, but essentially it drives everything we do on a day-to-day basis, whether you want to talk about buying a property, whether you want to talk about using a credit card. Everything we do is derived off of these yields. I'm curious to see how the yields respond to the next rate hike. If we get any sort of recession fears, I think a lot of people are going to flock to the long-term end of the yield. And I think the Feds are going to raise rates on the short term in the yield. And I think we're going to see some crazy yield action, which eventually is going to drive the stock market. Now, short term, Ari, I believe it could actually cause a rally, as when yields drop, that's usually a signal for the markets to rally. But longer term, when you get that inversion, not good, right? That's a slowdown on growth. So definitely that's what I'm really keeping an eye on. And I even texted you throughout the week that some prices were getting juicy here. And you were like, yeah, man, be cautious. And, so I agree with you on that. But man, did you pick up anything you're looking at? And I got a question for you and actually the viewers today, right? If you could pick two stocks, now you can't cop out on me, you can't pick an index, okay? Because you can't pick the SPY, you can't pick VOO. If you had to buy two stocks right now.
I'm a VTI guy anyway, so it's,
VTI. All right, so no world. All right, you had to buy two stocks today at the prices that they're at. What two stocks are you buying and why? And I'm cheating because I haven't done this for myself yet, but I wanted to get your opinion. And anybody watching this, if you have two stocks that you are eyeing or that you would want to own for the rest of your life in the market that we're in today, what two stocks would you be buying?
First of all, I'm going Apple. Hands down.
I knew you were going Apple. I was going to write this down. I think I was going to write down Apple and Johnson & Johnson. Those would have been my two guesses for you. Apple and Johnson & Johnson.
You're close with Johnson & Johnson, but I'm actually liking at this point more in time the healthcare play. Medtronic. Ticker symbol MDT, Medtronic. It's currently around $90, $91 per share. I think it will come down a little bit more. But I'm bullish on Medtronic long term, simply because we're talking about, Johnson & Johnson. It is one of my favorite stock plays out there for the long term. But I'd like to consider Medtronic almost J&J's brother or sister, if you will, right? Because it's just another healthcare industry leader. They're med tech focused. And what I like about Medtronic is I don't think that it gets enough credit that it deserves, but it's been beaten down throughout 2020, 2021, supply chain disruptions. They had labor shortages. They had elective surgeries that were pushed off in the hospital. Obviously not good for a company that sells medical technology. You know, my father, even working in the med tech space, something I just always heard from being a young boy was always invest in healthcare. It's needed. Yep. It's not going anywhere. And I've always run with that. Johnson & Johnson and Medtronic. I fared very well with Medtronic, picking it up in 2020. In March, rode the wave back, wave of recovery. And I'm looking at it again now. I did not pick up anything recently. I've been cautiously watching the market, patiently waiting. Actually, I'm waiting for July 12th, maybe July 11th, 12th, and 13th. I think we're going to get massive movements around these dates with the CPI data to come out. But have my eyes on Apple, Medtronic, Procter & Gamble, T. Rowe Price, and Visa as my top 5 picks now.
No JP Morgan, man. Come on, JP Morgan.
I
Dude,
know.
I think you have to start looking at the big banks right now, because when we think about Okay, so in my opinion, how we're going to know we're at a bottom, Ari, is the banks. The banks are going to lead us to the bottom of this market. Okay, technology, I think, you know, there's still a long way to go. Banks right now are trading pretty much for book value. If they get any cheaper, I think you have to buy them. And secondly, I think when they stabilize and flatten out and we get some buying pressure in the banks and get some optimism in this market, when they flatten out, I think that is the key. We are at the bottom of this market. The banks are going to lead us to the bottom of this market, in my personal opinion.
I would agree. You know, I'm going to come clean. I have Bank of America in my portfolio. And I've been dollar cost averaging into Bank of America, not as of late, but that is the position that I have over JP Morgan. Either bank, I think, are solid bank. I mean, JP Morgan's the largest bank in the US. Bank of America follows suit.
Yeah, I'm looking at JP Morgan. I got a story for you. I think you're really going to enjoy this. Taking a look at MDT right now, and I'll tell you what, man, 3% yield. When I look at the financials on it, top line revenue growth looks pretty solid. Obviously slow growth, but you stated that there's opportunity there for that to grow as they've dealt with some logistical problems of hiring. It sounds like it was hiring.
Crushed in 2020, 21, and now into 2022 here with labor shortages, but more so we're looking at supply chain disruption, drop in sales, and then just because of hospitals delaying elective surgeries. I mean, we're talking about a company that has been devastated by the pandemic.
And the crazy thing is, with them being devastated by the pandemic, cash flow still strong, man. Looking like almost pushing $6 billion in free cash flow. So I gotta dig more into this one. This one looks very interesting. What analyst expectations growth rate? Let me take a quick look here. I mean, I think this is a great call out. Next 5 years, double-digit growth rate. Does that sound about right?
Here's what I knew I was going to throw you off if I didn't say J&J.
Yeah, I know. You had me digging here. So no, this is a great call out, man.
I got to toss the ball over to you. Your top two stocks here that you would pick.
On this recent sell-off, man, ooh, this is a tough one. And it's so funny. Like, I was ready to ask the question, but I wasn't ready to answer it. This recent sell-off, it's tough, man. I hate to be such. I think I got to go Apple as well, just for the safety aspect of it. And if I was betting the house and I was holding for the long term, I think I would take the risk because Apple's such a safe play. I think I would take the risk with Meta.
What? Ooh, you know what? I don't even think it's that big of a risk. I think we're looking at 2, 3, 5 years down the road, a lot of growth to come at it today. You got to let time do time's thing, right? Like, I think what we're seeing now is a transitionary period for Meta, but there is so much growth ahead. They're the future. I was talking to somebody about this. What happened with Facebook, right? We had this boom, Facebook, the world loves it. And I think like 2-3 weeks before Meta was Meta, I was talking to a colleague and I go, you know, I'm not excited about Facebook these days because there's nothing new about it.
I'm not either.
A couple weeks later, Mark Zuckerberg coming in hot with Meta, disruptive, but I think there's a lot of growth. It is the future.
I think so too. It seems like there's a lot of opportunity for income with. The other thing you have to understand with Meta is there's 90 businesses rolled up into this company here. 90 businesses, and they're not going to fail. Well, I mean, I shouldn't say that. They're going to spend a lot not to fail. And they invest in the future, and they invest in architecture, and they invest in young talent. And that is innovation in itself. So they have an ability to acquire young talent. They've had a knack to kind of last longer than the trend, right? Today, TikTok is a trend. Is TikTok going to be here next year, or is it going to be a new trend? I don't know, but I know Facebook has had staying power when it comes to this. And then you think about the Meta, it's like you can buy Facebook today for just buying it for the cash flow. And then anything above and beyond that comes out of Meta is actually just free return for you because you're basically buying it you're buying it for the cash flow as of today. Anything it does above and beyond that cash flow is basically it's playing with the house's money, in my opinion.
Just say, ladies and gentlemen, you heard it here first from Financially Fit. Guarantee your money back.
No. Don't put me on the spot. Watch, they file bankruptcy in like a week. I'll be like, yeah. Hey, it's better than those crypto. It's better than those crypto sites everybody's recommending, dude. How?
Can we talk about crypto for a second here?
Good Lord.
Because I've been watching the crypto market just tank.
It's crumbling.
I think there's money to be made there. I don't want to, throw anybody off their game, but it's a gamble. We're talking about a gamble here, and the value behind crypto, in my opinion, there's nothing there. It's based off of supply and demand. Demand is low right now, and people love to gamble. And there we are, once again, people losing money with crypto.
Yeah, I'm in the same boat as you. I advise people to, family members to kind of stay away from it right now. It's not solving a true problem here. And when I look at businesses, I can value a business because a business is solving problem. A business spits off cash flow. I can say I'm willing to risk X amount of money because this business has X amount of opportunity and it spins off X amount of cash flow. When I look at crypto, the only thing that's going to drive the price is that my next door neighbor is going to pay more for it than I did. And I just don't see the value in that. Now, I'm sure I'm missing a lot of different things here, and that's okay. I'm okay missing it. I just personally don't know how to value it. So no ill qualms with anybody that has it. And anybody interested in it, I try to treat it like part of their portfolio, like maybe 5%. It's like a gold play. It's a cash play, leave it at that. That's kind of my mentality. And that leads me
13 years into this experiment, if you will, with crypto. Again, it's going to take long time for crypto to actually break in and I think generate value for itself. I'm not saying there's never going to be value behind it. I don't know. But to your point, right now, as we stand, it's a gamble.
So I don't want to get too deep in conversation and take away from what we're doing here. Had a long conversation with somebody that is a subscriber. I'm not going to drop any names, but he wanted me to go over their portfolio, really give my opinion. And I was like, this is not financial advice, but this is what I think. And we had a long conversation.
Your money back.
That's right. It's like, hey man, don't sue me, bro. But one of the aspects that we differed on was the crypto, and he asked why, and I said, well, my money is FDIC in a brokerage account up to 250,000, in my bank account for 250,000, and the other thing is this, Ari. If there's a liquidity crisis, but I have a relationship with my credit union, and I have a relationship with my bank, and they can look at my assets and say, you know what, Colton, you're worth X amount of dollars. We're willing to take that risk with you. Here's a loan. You can't really do that with crypto. So it's not insured, a lot of shady action going on. People are getting wallets hacked. And then I think about the fact that I don't understand how to value it. And then I think about the fact that the reason why I have my money in a bank is to possibly leverage that money I have in the bank for hard assets, right? Not digital assets, but hard assets, whether it be really a real estate, whether it be starting a business, something that I trust in myself. You're trusting in a complete entity that you have no control over, much like investing in a business. But with a business, there's SEC filings, there's, quarterly report, you have all this stuff to follow. You have a paper trail to follow that. Don't have that with crypto, right? No real, it could be vanished tomorrow, and no insurance, no paper trail,
I'd like to add, not yet.
Not yet.
But I think they're trying to get more regulation, right, behind crypto. And I totally get it. The whole idea behind crypto is no regulation. But in order to make people feel safe, okay, you need crypto. I don't even want to get, political, right? It's like everybody's anti-police all of a sudden, but then stuff hits the fan and,
you want the cops.
Police,
yeah.
Right? So
yeah.
We do need regulation on crypto, and that's just the reality. And I think once we do get regulation, it will become safe for everybody to jump in the game. And I think we'll start to get some more value if there's regulation behind it. You go to ask someone in their 40s, 50s, their thoughts on crypto, it's not safe.
Right.
So you make something safe for the masses, you put regulation behind it. Again, all of that will take time. And right now I just see a market that loves to gamble. I don't know if that, the younger generations have ever really shifted. We've always been more, gamble-esque, right? And then you begin to get in your 30s and your 40s and your 50s and you're playing it safer. But that's my take on it.
Yeah, no, I agree 100%, which leads me to this next part. Definitely want your opinion on this as well. So guys, if you're coming in this and you're enjoying the content, just ask that you smash the thumbs up. So that conversation I had with the individual asking about his portfolio and talked crypto for about an hour, then went over the rest of his portfolio.
For 5 minutes.
No, it was a long phone conversation, but I think we both got a lot out of it. One, it kind of just made me remember that I am bringing value, even though I don't have the subscriber count. I am bringing value to people, I think, that are, unfortunately, it seems that this YouTube algorithm really pushes the crypto, the 10x stocks, and it seems like the people that actually put out content, and that's why I love having you here, and I think that's why we connect, is that we're really trying, we might not have all the answers, but we're really trying to put content out there that is unbiased, truthful, not always the glamorous winning 10x stock, but it's safer, and safe is not always what gets rewarded. It's, unfortunate, but want your opinion on this. So portfolio was, and I hope they don't mind me using this, but portfolio was Very Good Food Company, Beyond Meat, DraftKings, Skills, Voyager, PayPal, SoFi, T-Doc, Hims, Baba.
You're asking a very, I want to say risk-averse investor, right? Value investor. These names are very reputable companies. I'll put that out there. I think there's a little bit more risk to each of them. You said very safe food company. I thought you were going to hit me with like Hormel Foods, right?
No, I mean, so a lot of these companies were the SPAC deals that a lot of individuals in YouTube have been. These stocks, if we talked about these stocks, Ari, I guarantee we would have multiple thousands of subscribers on top of what we have now. And it's unfortunate. Listen, guys, listen. The next 10x stock is right here. The next 10x stock. Listen, Very Good Food Company. Let me just pull up the chart here. I want to show you first off. And this person is in their 30s, and we had a long conversation. And I said, listen, you have come a long way because this person is starting to value stocks, okay? Starting to look at the deeper value of stocks. So Very Good Food Company was, I don't even know, where was it ever? It was about a $6 stock. It's at 23 cents, okay? Now these are stocks, Ari, that people were buying up like crazy because they were
I remember, yeah.
Yeah. DraftKings is another one. Now, DraftKings is somewhat interesting. I did a video on DraftKings, did not like it. I said you need to wait.
Is this the whole portfolio? I mean, all what you mentioned and then crypto.
A big part of it was this. Yeah. And the reason why, that's not what I wanted. The reason why I'm bringing it up is I don't think this person's alone. Okay, that's why I'm bringing this up. I don't think this individual was alone in building this portfolio. What I mean is a lot of viewers, a lot of people that might be stumbling on this conversation that we're having probably have some sort of ownership in a lot of these stocks, right? SoFi, interesting. All these companies are unprofitable from basically a cash flow standpoint, all of them, okay? So I had a long conversation with them. I was like, listen, you know how to value stocks now because we've done a lot of phone calls, right? You know how to value stocks now. Discounted cash flow analysis is great, but the problem is it's not a guarantee. It's how you analyze a stock, right? And so we had this long conversation and I was like, listen, you have an opportunity of a lifetime right now. The market is down 24, 25%, probably going to come down even lower. You don't have to outsmart this. You're talking about Apple, Facebook, Microsoft. Buy VOO, layer it in with some VTI. You're given free money right now. Like you're given free money. This is this is your get out of jail free card.
I feel so alive.
you effed up. You bought all the hype stocks. I said, you're still young, and this is your opportunity to go heavy in the indexes and layer it in with good quality companies. And I mentioned the banks, I mentioned healthcare, and I mentioned chip makers. I said, buy VOO because you need to, at 30 years old, you need to own the top 10% of VOO. You have to. They're too innovative. They're not going anywhere. They own the market. You have to own the top part of VOO. I was like, you have to own some healthcare that pay dividends that are boring. That's going to lower the beta in your portfolio. And I said, you have to own the chip makers on this massive dip we're going to have, because they're essentially going to run the world in the next 15 years. You know, whether it's cars, cell phones, computers. So
call it 5 to 10, honestly.
Yeah. So this is what you need to do. I want your opinion, what your thoughts are.
Yeah. So first of all, I'll preface by sharing that, and by no means I'm not a financial advisor. I gotta throw that out there. So always do due diligence after listening to me. But at the end of the day, I've helped a fair amount of people get out of debt, start investing into the market, and actually establish, for all intents and purposes, financial fitness, right?
Yeah.
And something that I've recognized across the board is, whether it was when I worked at the real estate firm, right? One of the guys in the mailroom asked for help, and he was in debt. He had 2 kids, and he wanted to navigate through that and get out of debt and start investing. Or, it was someone that I had met in a cafe actually in Manhattan. We just started talking in line about investing, one thing to the next. We're an hour, sitting there together. Totally different situation, but same exact type of mentality when it came to investing, finance, again, financial fitness. And what I always share with people first and foremost is, before you get invested, please set money aside for yourself for emergencies. I call it the oh shoot fund.
Yeah.
Right.
Yeah. We talked about it a lot. Yeah.
Yep. Life is going to happen. And if all your money is sitting in the market and all of a sudden we get a recession, even a bear market, what are you going to do? Now, if you're single and you don't have anybody depending on you, okay, but still not safe, right? But for, God's sake, your kids, wife, husband, whomever, have that money set aside, have a financial plan before you even get invested. So that would be, what I would share with this subscriber of yours, first and foremost, is getting yourself set up prior to investing. Now, when it comes to investing, the first step is finding yourself in a broad market ETF or index that covers the entire market. You get growth plays in there, as well as value plays. And I call that the foundation. You want to set yourself up with the foundation before you start throwing money into individual stocks, and more so into riskier plays. So I hear this portfolio. I wouldn't have guessed that this subscriber was in their 30s. I would have said maybe earlier 20s.
Yeah, but Ari, on their defense, I think we're probably a little bit more mature in our thought process. I think that, unfortunately, when this is the new .com, and everybody that's subscribed to my channel, I've been calling this .com bubble, the SPAC bubble, the coin bubble, whatever. 6,000 coins, 2,000 SPACs. It's the .com bubble all over again. It's just a new shiny name for it, right? So it's the same behavior that happened in the .com bubble. It's the greed factor. People are led by emotion. You're 8 times more likely to buy something off of emotion than logic. 8 times more likely to buy something off of emotion than logic. So what happened? All these great stories came out of SPACs. They have no fundamentals, Ari. No fundamentals. All stories. They're hemorrhaging money, but the story is unbelievable. And that is the emotion aspect of investing, right? And so it's unfortunate. I think it's impacted more than just the younger crowd than you're thinking. I think it's impacted the broader market as a whole, because you can watch CNBC and you're watching a lot of these big time hedge funds add positions into Robinhood, add positions into SoFi at $15, add positions into, HIMS, or not HIMS, Teladoc. These are mature, savvy investors that are buying companies the same way companies were bought during the dot-com bubble. Same exact way. And so I agree with you. I think your thought process is so logical and mature and unemotional that you're thinking that it's probably a younger person. It's unfortunately, I think it's the broader market.
I would agree. Just when I think about this type of portfolio or mindset, but you're right. And this takes me to I'm a huge quote guy, Warren Buffett, though, when he talks about the stock market being a device to transfer money from the impatient to the patient. That's what we saw during the dot-com, and that's what we're seeing now. People who are impatient, right? And again, pays to be patient. And Warren Buffett's way of investing, it's so boring, but it works.
It's so boring. It's so boring, and it's so predictable that people don't want to do it. It's like, this is just too easy.
Correct.
This is too easy.
But everybody wants to pick the next hot stock. And, I was actually speaking with someone the other day about Kathy Woods, right? And her pick with Tesla. And
it's the only thing holding up her portfolio.
Oh, absolutely. I mean, you look at the other investments within her portfolio, they tank. And she's all growth, right? But at the end of the day, she had a very lucky pick, in my opinion, with Tesla. Blew up her career. And now you have a lot of youngsters who are following her in the ARK K and the ARK this fund and the ARK that fund. To heck with Warren Buffett, to heck with Charlie Munger, right? Peter, all these guys no longer are relevant, I think, today. And we're looking to get rich by Tuesday.
Yeah, no, I agree. And this is the ARK ETF right now. And I mean, you can see it's pretty much dead money. It's pretty much, we had this great stimulus run up, but you're back to where you pretty much started in the ETF. Oh, by the way, let's minus out the expense ratio too over the last few years. So you're actually losing money if you start. If you bought the top, you're screwed. Let's just be quite honest on that one. You bought the top of this, you're screwed.
Going sledding.
You bought. I actually feel more pain for the person that bought it a few years ago and rode it all the way up and rode it all the way back down and paid all the expenses.
Don't.
Yep. Like, you didn't get anything. You it's like coming off of a high,
You paid someone to take your money. I would have done it for free.
Like, I would rather buy the top and be like, man, I lost my shirt, than be like, oh, I quadrupled my money, and then tomorrow rolls around and I have to give it all back. Like, what the hell? But yeah, it's like, let's take a look at the top holdings in it. I mean, I know she's basically using it as a day trading device at this point, as much as she's actively managing it. At this point, Ari, I actually think some of these companies are pretty interesting. Now, what are they, strong buys? I wouldn't say that, but I think they're interesting. You look at a company like Square, Zoom. I mean, I guess Teladoc at these prices, Roku at these prices, maybe.
Look, I think they do. There's potential, and I see where she comes from in these picks, right? They're long-term potential. When I look at like Teladoc, right? That is something I think prior to the pandemic that would have slowly but surely started to take off. Eventually, the pandemic hits, and what do you know? Everybody needs, right? If you need medical attention, you pop open the app and you speak to a physician. Yep. But now, right, it's not necessarily, I bought ARK at 120 and glad I only bought 2 shares. My friend, I'm glad you also only bought 2 shares. And look, at the end of the day, this is why we created the YouTube channels, right? I'll say this again, I said it the last time. I did not necessarily create my YouTube channel to just monetize it and get filthy rich, right? I had one goal in mind, and that goal was to at least help one investor.
Speak for yourself, Ari. I'm waiting to get filthy rich.
I'll give you a Bitcoin, but
oh yeah, I'll trade that thing in right away.
To help one investor, that was the goal. Help one investor, and by one like or one comment, people have learned something from my channel. People have learned something from your channel. It's a success. whether it's a large channel or a small channel, it doesn't even matter. And so you have, loyal subscribers. I'd rather have that than I'm not going to mention any names, but these hot stock YouTubers, and everybody's following them around. I don't need that. I don't want that.
There was a comment on my channel the other day that was and I don't know do you ever get haters? Like, I don't know. I feel like your content's so like non-biased, you don't get haters. Like, I kind of tend to be a little bit more blunt than you. I'm a New England guy, so that comes out sometimes.
Yeah.
But like I got a good.
I was a New Yorker, so
Okay, so you could come off a little blunt sometimes. But the best comment I got recently, and it was the first comment that they ever had, and they said, "I don't know how you don't have so many more subscribers by the way you break down stocks with an honest opinion." And I was just like, that's all I want. That is what, because sometimes, do you ever like want to just like say, screw it, I'm not making any more content? Because sometimes I'm just like, what, like you forget why you're doing it. And then all of a sudden you get a phone call and you're on the phone for 3 hours with a subscriber, or you get that comment. And I'm just like, this is why I do it, because I'm better. I might not have as many subscribers, but I'm better than the people that are pumping this garbage. And that needs to happen. Like, more of that needs to come out.
Well, like that's why you always got to go back to why you started, right? I didn't start to monetize the channel and get filthy rich. Of course, there's an element there where it monetizes and you start making money, but I started with the goal to help one investor. And when I start to run with that mindset every time I create a video or push content out there, I've succeeded. But have there been times where, I'm like, this is no traction, I'm watching X, Y, and Z with 1 million+ subscribers preach about some, cryptocurrency, hot, whatever stock, and it's taken off. And we're in a time period in which, like, dude, that's not the way to go. But my channel's, growing slowly. Look, I appreciate all my subscribers. And like you said, you have closer connections with them. But at the end of the day, I know what we're doing is the right thing. That's all that matters for me.
Yeah, no, I agree 100%. And that's all we can do is, it's like I said before, I'm not going to have all the answers. But the thing that is baffling me, Ari, is this, okay? This is what I get upset about, is the YouTube algorithm seems to push the garbage. Like, it just seems to push business. It's crazy, right? It's like the best YouTubers that I like subscribe to and that I have a ton of respect for have like under 50,000 subscribers. And I'm like, I look at them and I'm like, how do they only have 40,000 subscribers? Like, how is that possible? But yet you have YouTubers who are, I don't know, do you know this Voyager? Have you been following any of this Voyager crap?
No.
Okay, bro.
But
this is serious. Yeah. Oh man, this is serious. And anybody that has Voyager, I appreciate it, man. At least somebody loves me out there. I appreciate it. So, no, I do love a lot of my subscribers too. Like, I really want the best for people. I'm not the most educated, smooth around the edges type of person, but I'm a people person, and I'm going to work my to make sure people don't get screwed. And the thing that frustrates me the most is, and I have a financial background. I got an associate's in accounting, but was studied for the Series 6, Series 7, 65, and was in financial services for over 6 years, and said, I don't want to be a salesperson. I want to be an advocate for finances. So that's why I kind of like changed paths here. But to get to my point here, Voyager, okay, this was a platform that was built basically on the backs of YouTube superstars or people that, and it's a Bitcoin, it's obviously a Bitcoin platform or a digital asset platform here that is belly up at this point, and people can't get their assets, and YouTubers were recommending this and getting paid to recommend this. And now the company's belly up. We see the collapse in crypto. They can't get their assets out. And I'll pull up the chart on it. But People are still subscribed to these people that recommended this garbage to them. And I can't wrap my head around it when I sit here and I'll go through a company, and you saw me do Palantir, right? And the reason why I do Palantir is a lot of people invest in Palantir. It's a love-hate stock. It's searched a ton. And I just want to give my honest opinion. I think the company is a high risk, high reward. I think there's a lot less risk in it, under $7, and I think it's interesting. And I broke down why the reasoning is. I don't say you need to buy it. It's a 10x. It's this. People were recommending Palantir at $30 and $35 a share.
Is it Chris Sane?
Chris Sane, you know, some of the, even just more than him.
He posted a video today, which I actually was a fan of, because he listed 4 value stocks. And I said, you know, I wrote a comment there, and I just had shared that these are the stocks that you should be pushing. And for what it's worth, I mean, I hope 1 or 2 individuals can see a comment like that and say, huh, I wonder why he's making that comment.
This is this is the chart of Voyager Digital. Okay, dude, $20 down to 30 cents, and people still subscribe, still thank and listen to these people. And I wonder what the hell I'm doing wrong in life. Like I do. I sit there and I like, my girlfriend would totally tell you, she's like, I don't understand it. I don't understand it. And then, like, it's just all it's the Oatly's another one. I looked at Oatly, and
you know what? This is what happens, because I had comments recently on some of my videos, likewise yours, right, where people had shared, thanks to your content, right, I've been able to shift away from those other YouTube accounts and now going into accounts like yours. And I mean, it really is. It touches my heart, because you know you're making a difference at least somewhere at some point in time for someone.
Yeah, I mean,
people lose, right? It's exactly like in life. You can't. It's not this upward trajectory. You gotta get knocked down. You gotta hit a rock bottom before you're gonna change. And unfortunately, I think people have to lose a fair amount of money before they realize.
Yeah, and the thing is that it's like I'll get 1 or 2 people that are like, man, I don't know why YouTube didn't recommend your channel before. And I'm like, I don't know why either. Like, I wish people are baffled that they stumble on my channel, and they're like, I'm just like, the algo hasn't picked me up for whatever reason. I don't know why. I don't know what I need to do. But
well, look, there's an age-old saying, and you're probably very familiar with it, right? But everybody's smart in a bull market.
Yeah.
And right now, I mean, here we are in a bear market, most likely going to enter a recession. And we're about to see, right? We're about to see who's who on YouTube. And I just hope, I mean, really, for the millions and millions of subscribers that are out there for a lot of these channels that are pitching these meme stocks and so on and so forth, I really do hope that their followers wake up during this period of time.
Yeah, I guess we'll sign off here, everybody. And yeah, man, it was great chatting with you once again. Always enjoy this, and really like where this is going. So hopefully everybody else is finding value in this. And yeah, man, we'll sign off here. As always, guys, appreciate your time.
Always a pleasure to be on here, and wishing everybody the best of luck during these volatile days. Play it safe, be patient. We'll catch you in the next one.